Good evening, everybody. All right, nothing major to analyze here. The market just keeps heading up as long as it stays above the T line, and the real compelling strength in the market is here on the NASDAQ. Ever since we did kind of the double doji gap up. So the fact that we have this bullish signal, gap up, now gapped up through this level after gapping up through the 50, after gapping up above the T line, just implies that there's a lot of bullish sentiment out there. Probably have to expect a little bit of profit taking with this magnitude of move, but overall, you want to stay pretty much long on all the strong signals and patterns. So the sectors are working. Right now, the steel-related stocks, you can see BBL did another best friend signal. So this is why we were hanging on to it as long as it stayed above the T line, just looking for this type of move. So now the next analysis is, if they get through the 50, your next target is likely up here into the gap area. So the other steel stocks are acting well. Steel Dynamics still in a nice steady uptrend, as long as it stays above the T line. Schnitzer Steel, I don't know why this keeps going back to that. Keeps moving up. U.S. Steel got a little bit soggy today, but probably still in an uptrend. And Vail, guys, kind of into the mining area also. Another good breakout situation with kind of a bullish flutter kicker here, kind of a doji sandwich, now a trend kicker breakout. That one probably has a lot more upside. Okay, some of our existing positions still acting well. AFMD, best friend Morningstar signal, J-hook pattern. RFP, left-right combo, gap up, still a good strong uptrend. ACMR was recommended also because of this best friend gap up. It opened positive and traded lower. It can still be bought on positive trading. But let's see, I don't know whether this one's going to come up over here. I don't know why KLR doesn't come up over here, but that one's got a good chart when you can see it. Vert, wave 3. REVG also had kind of a little inverted hammer gap up. So one thing that I was going to mention is, what is the factor here that we can see in all these charts right now? The gap ups. Anytime you see any type of candlestick signal followed by a gap up, that's pretty much revealing that there's a lot of strength coming into that stock. Our buy on SWAV, best friend gap up. FGEN, best friend gap up. So these gap ups are what, yes, a lot of inverted hammers, which I'll get to, I think. Yes, I got a list of those. So we're still watching Mavis because of its big move, consolidation, back to the T-line again. If this opens positive, get ready for the next move to the upside. Clovis Trying to keep its head above water up here above the 50-day moving average. So some that were looking a little bit dicey now is SXC. Hasn't closed below the T-line. It did have that hammer gap up. It needs to start trading positive here pretty quick. Blink, kind of the same scenario. Needs to stay up above the T-line, and Pola also needs to stay up above the T-line. Vist, bunch of flat trading dojis. It has to stay above the T-line also. Now, the prospect or the likelihood of them staying above the T-line is pretty high because of the other elements that you can see in the trading. Morningstar signal right off the 50. So anytime you start seeing these strong price moves, even though they're backing off a little bit, kicker signal on HZNP. The main factor, though, is that they've had strong gap up kicker type moves. Yeah, the oils are trading off. Occidental, for example, selling off. Apache selling off. And EOG selling off because it looks like crude oil is right at 59 after being up, coming off the 66 level. You can see it's gone pretty much flat. And let me see if I've got everything here. Oh, ACMR. Oh, did we do this one? Still can be bought if it comes back up through today's open. So look at your doji, gap up, gap up. The Stochastic's coming up. The implication is we're in an uptrend, so you get ready to buy on the next place that would tell you the bulls are back in control. The biggies were even trading up good. Tesla didn't have a strong move to the upside, but was trading slightly positive by the end of the day. Apple, your best friend gap up, inverted hammer. I would suspect they're going to test this level and then see if they can get through the 50. Amazon came through the 50 with a little rounding bottom. So even if you're not trading these, you can see what the investor sentiment is doing in the overall market at this point. NVIDIA trading up, Netflix. You can still buy this one on positive trading tomorrow. BWEN came right back to the T-line area. This one has to open positive and trade positive tomorrow. If it trades lower, close it out. It didn't come out of the chute like it should. Yeah, you got Microsoft again. Microsoft is not a dynamic trader, but you can still see the buildup of investor sentiment because now you've got the prospect of coming back up into that trend channel. Okay, so the high probability trade setups are a bottom of a channel. You can see how you got a trend, right? A Morningstar signal right smack dab off the 50. Stochastics coming up. Doji sandwich, so your McMuffin. Where do you think your next likely target's going to be? Probably the top of this channel. Oh boy, It depends on the pattern. If it's something that just, Steve, just climbs up through the 50-day moving average and goes up a little bit, sometimes they come back to see if if they'll come back and test the 50 to see if it's going to act as support. Otherwise, if it's a pattern breakout where you can see the little slow curve bobble breakout, that kind of implies you're still heading up further. If oils open negative, would you short oils? I don't know the answer to that. I don't think, oops. It's not like we're seeing any strong selling in the oil area. Just going sideways, which means some of these that got extended buying on the way up are still kind of consolidating. You could short them. You just want to be a little bit, oh, you shorted a Apache. All right, so as long as it doesn't come back up above the T-line, you're all right. I think some of the smaller stocks, I think there's a change of attitude. I wouldn't be so much going after NIO because if I understand, that's still kind of a startup company. I don't know how big XPEV is. And now Quantum, Quantum is not so much a direct manufacturer versus the battery. This one has more upside prospects to it because of its technology, which is a solid core lithium battery. That one I'd be out of all of those. Now, the reason that some of those other ones like NIO might not have the, did it again, same capabilities they once had over here. If I can make this small enough. The same capability just yet is because of this. Things like Ford Motor Company that are already established big companies with the manufacturing, the marketing, the distribution, everything. So now all they need to do is apply electric or battery technology to their cars, and they're going to be way ahead of a small startup car company that's just being developed because of electric batteries. So if everybody's got them, now you got to come back to some of these big manufacturers that are already well established. Ford needs semis. Semis what? Let's see. Oh, what are you? Let's see. Oops. I didn't read your quote. What time period on the chart? Oh, it doesn't really matter. All we're looking at is this right here. I can make it bigger or smaller just to see what's happening right now. So my analysis on GM is they've bottomed out right here. And so the magnitude of the chart doesn't really matter. It's witnessing what's happening here and then going back to see what's the overall chart look like. Is there a resistance level somewhere that everybody would be watching? So it doesn't really matter how big or small you make this chart. Our analysis is right here. What's it doing on the short-term basis? And we can pretty much see what's doing here on the overall trend. Yeah, Blink I wouldn't give up on. because it's done exactly what you would kind of suspect it would have done. First came up, tested the 50, hasn't closed below the T-line. Stochastics haven't really moved. I would watch to see if they're in a bobble situation. Ford, I don't know whether that was a kicker or not. Yeah, a little kicker type signal. But what does this imply? Kind of implies the uptrend's in progress and they're still using the 50 area and the 34 as a support. Where would you think the next logical target is? Right back up into this trend. Oh, semiconductors. Yeah, I guess that's the shortage right now. So that's why Applied Material is acting strong. Why Micron is about ready to break out. Advanced Micro is okay. You just have to be aware that it's fighting this downward pressure. Yeah, and that might be, so this is why you always want to let the charts tell you what's going on. Because if you think you've got something that's really great technology, the manufacturing all set up, there's always outside influences that's going to affect investor sentiment. In this case, they can't get enough chips to put in their cars. So that slows down production. So there's always other issues that are affecting a price. Yeah, so as long as this sector is showing strength, you stay long. Okay. So we did ZO or Zedge. What did I do wrong here? ATXI. Morningstar signal, doji sandwich. Where do you think the next likely target's going to be? Morningstar signal, doji sandwich. More upside. So if you just recognize which signals and what that signal might be doing to a pattern. So here's the logic. Here's the 2+2 analysis. Got a Morningstar type signal, followed by a doji sandwich, a McMuffin. What do we expect out of a Morningstar signal? More upside. What do we expect out of a doji sandwich? More upside. What do we expect out of the McMuffin? A double probabilities you got more upside. If we have more upside coming on this, what's that tell us about our chart pattern? Pan bottom looking to go into wave 3. So just becomes a very good process for putting all the probabilities in your favor. So if you got something like NPTN, I think I did that right. There's your Morningstar signal. That looked a little doji-ish on the EC2000. But if this opens positive, giving you a McMuffin, you got wave 3 of a J-hook pattern. All right, so the inverted hammers, yes. Inverted hammer, J-hook pattern on IO. Which was the other one? Was this it? No. That was on the short list. What was it? NBIX. So when does a pattern not work? Well, there was your inverted hammer. There was your safety stop. Not working. Would have gone on to something else. So even though we see very good chart patterns, that doesn't mean they're all going to work. You still have your safety stops in place. Nice fry pan bottom on G-Box. I don't know if that chart is longer than this or not. Let me take a look here. EBOX. Yeah, for some reason, yeah, I don't know what causes that. Why unless it gapped up? No. Anyways, there's a fry pan bottom, and it's now trading up here after hours. So that's one you get ready to, the NBIX is up that much. That means it's up about 99. All right, keep an eye on it. You have months on the bottom. Is this a daily chart? Yes, this is a daily chart. So that's our first analysis, is to see see which way the overall trend is. So this is a daily chart. This happens to be April, what is today, 5th? So it just shows you what, now if I want to look at this a little bit heavier, I do this. If I want to see what the overall trend of this chart might be, make it a lot smaller. So yeah, but the analysis isn't so much this, it's more what's happening here right now. Okay. Farm, kind of a little inverted hammer, doji sandwich. What do you got here? That inverted hammer confirmation. We did VRTX. We did that. Oh, I'm going backwards. No, I'm not. Farm. And KC recommended this one today based upon the inverted hammer gap up. Still will be a buyer of this, especially if it comes back up through today's open. That would tell you the profit taking's over. It looks like the uranium or the mining stocks, there's your doji sandwich. What's your anticipated target? Well, if this is the bottom of your channel, which is using the 50 as support, draw a parallel line up here, so you're probably heading up into this range. I find it fascinating how certain signals and patterns will dominate for a few days to a week and a half. Can you speak to that? Well, not really. That's why we're looking at the patterns to see what is setting up. Scoop pattern, bullish 3 white soldiers, now a J-hook pattern. Now maybe it's time to sell. We did a bearish engulfing signal in the overbought area, closing right on the T-line. So this is what we're looking for, is the prospects of an uptrend. But then once the uptrend starts, we have to use our other analysis or other indicators to tell us when that uptrend is over. So just because a good pattern setup appears doesn't mean it's necessarily going to be a confirmed or sustained uptrend, but it's putting you in the probabilities of being something that could be a strong uptrend. But once it starts, you use the T-line as your indicator. So here's AUVS, UAVS, all of a sudden started taking off. Double bottom, gap up. Watch your first target. If it breaks through there, good running room until you get up to your second target, which is filling the gap. Good chart. So why would this be a good chart? Jace, yes. That goes back to the answer of where people say, what are the strongest signals and patterns out of your 12 signals and patterns? And the answer is, at any given time, you might have uh, a market condition where this month it might be, or this week it might be inverted hammers. 2 weeks from now it might be hammer signals. So it's not that any one is better than the other. It's just that they occur quite often, and sometimes they work more, or they will show up more plentiful because the whole market condition is forming those type of signals. Kathy, yes. So the biosciences are things that you want to keep an eye on, because just like the electric vehicle sector, where somebody's technology could put them out in the forefront when they have improved uh, technology, the whole biotech area is all of that, which is these companies are based upon their research finding products that are going to be big profitable products because they found a cure for whatever, or help find a cure for whatever. So that's why the biotech area has the same ramifications of, you want to be doing the rare process on those, because you can't tell, or you can't follow thousands of little research companies. You can't follow hundreds of, or even 50 research companies. But what you can do is, if you see a breakout or a big candlestick reversal signal, at least you can go back and research and say, all right, what did they just do that everybody started jumping back in? That's where you identify, oh, they've developed a new cure for such and such. So now they'll usually move in uh, different price moves, meaning patterns. They'll head up, then people will lose interest until the next strong signal. Ruckus, notice what was happening in all the other ones that looked good. They were gapping up. So you got a doji, both bouncing off the 200, doji, gap up through the T-line. Where do you think your next first target is going to be? So that's about 10% away, just to see whether you've got a better trade. And if it fails, at least you come back out and you made 6% on that quick trade. CDXC, observe the obvious. There's your little inverted hammer, right smack dab off the 50. Now your doji sandwich. That's a viable chart. Where do you think the first target's going to be? Probably somewhere up in this range. They pop on news, yes. Now the news is a lot of times that they went through phase one, got good passing results. Now they're going into phase two. So that means they'll pop for a little bit, and then everybody doesn't want to wait another 3 months, 6 months, or a year to see what the results of phase two is. Along the way, the FDA was say something like they're giving a fast track to their approval, all sorts of things. But what really matters is once they get approved on a phase 3 testing or show good results, now they're ready to go to production, which is usually a case where usually a small research firm doesn't have the production capabilities, and that's where Johnson & Johnson or Bristol Myers comes in, and they do up a joint venture with that company to market their products. And that's where the next big move will come from. G-Box, as we say, had a much bigger chart than this, but it's gapped up into this range, so that looks like a fry pan bottom breakout. What did I do again? Okay. KPON, little gap up, kind of a doji sandwich. You're right here at this breakout level, double bottom, bouncing off the 50. You can buy this one on positive trading. Oh, is that on G-Box? How much lower? No. It's a steady uptrend. I don't know why this chart has cut it off there. That could be too. Yeah, but I don't see it down there. All right. And so it's pretty clear. Whoops. Oh, that this was a sell with a doji gap down and a buy on a Morningstar signal with a doji gap up. Now look for this to come back up into the trend channel. So the big benefit we have with especially identifying the ones that have gap ups. Oh, yeah, that was great. I thought I would have one right away. But you can see what happened here. This is what we look for. This was your strong reversal. The next day, which was Thursday, it opened and traded lower. Not great. But where do you buy? When it comes back up through that level. Why? Because this was the area that told you the bulls were taking control. Okay, now, there's also, you want to have some protection by having short positions on. So PRVB, I'd get ready for a wave 3 to the downside. Notice where it failed, right here at the T-line with the bearish engulfing. Notice where it failed up here, right here at the 200. So you probably have a wave 1, wave 2, wave 3. AMRS, you can see the slow curve failure. Where do you think the first logical target will be? Down about 12% here to the 50, and then you see what happens at that level. PXD, there's your bearish kicker signal. Where do you think your first target's going to be? At least down to the 50. And Farfetch, another failure at the T-line. Probably coming back down here. So if you want to have a few short positions on just to kind of protect from a big market swing or a profit-taking swing, pick out the ones that have already are having bearish signals. MAXN, bearish engulfing. Which way is this going? You can pretty much draw a line right down through the tops. I would suspect at least coming back down to test the low. Well. I don't know why that one's not coming up. So I'm going to speed right along. NVAX. Wave 1, wave 2 failure. Where do you think wave 3 is taking you? Down here. So right now, with the markets trading in this kind of solid uptrend, you pretty much want to stay long. And you definitely want to go after the things that have high probability pattern setups where you know where your likely target's going to be. Oops, I could do this. So if you can pretty much draw parallel lines, you can see that you've got essentially a trend channel. That makes this level your next likely target. So let's say 1850 is your target off of 1384. 3, 4, 4.5 points on a $13 stock, pretty much giving you about a 45% upside potential. So those are the type of trades you want to go after. That's where you're going to get good price move. And or you might buy a 15 and sell a 17.5. And you might get a much better trade doing that spread, which is very simple. Maybe you pull up the spread. If you're only paying 60 cents for that spread to go to 250, that makes it well worthwhile. Okay. This is the amazing sector, the amazing indicator. Let's get rid of that. Let's get rid of that. Double doji, best friend gap up, gap up, gap up. Stochastic still heading up. Now you look for an exuberant day at the top. Raj, I usually go maybe 2 weeks out because you don't want to get too far out in front or too far away because the maximum return is going to be coming on expiration day because there isn't any more premium in either one of them. So theoretically, if it's trading at 17.5 and you bought a 15 and sold a 17.5 for 60 cents, it's going to maximize your profits at 2.5. That's the upside limit. So anything above 17.5 is going to give you that 2.5 total. But if all of a sudden, let's say you bought it 4 weeks out, and in the next 3 days it went to 18, and you paid 60 cents for it, the prices of those options can be moving around that you might be sitting in it for the next week and a half where the spread is at 50 cents. Even though it's gone up dramatically, the price of each side has moved to the point where you're actually got a lower price on that spread. Now, if it stays up there, it will start widening out the closer you get to expiration. So, and that's what we're going to be going over this weekend is how far out do you take your spreads? When do you put on a spread? When is it more logical to put on a spread versus just buying calls outright? So we're going to be walking all through that Saturdays. Ronnie, I don't think you have to worry too much about sector rotation out of biotechs. Now, you might be more apt to see the rotation occur in the big biotechs, where they're established drug companies versus the smaller companies. The smaller companies are always going to have the potential that one of their products that they're researching gets approved, and that's the whole point of investing in biotechs is knowing that the product they've been researching and spending money on for the last 2 years now is coming to fruition and might get approved. That's what moves a biotech stock. The NASDAQ 2 gappy, not yet, because look where your stochastics are. You're not even anywhere near the overbought condition. So what does gapping up tell you? That they're coming into this market with great enthusiasm. So if the market is being bought with great enthusiasm, where are you wanting to be? You want to be in the chart patterns that have the best potential move to the upside based upon the pattern itself, and then knowing the market in general is not selling off at all. Oh, the Masters on this coming weekend? I always forget. Oh, on bug, is that an ETF? Cybersecurity. It's not that any one sector is going to be, or it's not that all sectors are going to be skyrocketing because the NASDAQ's skyrocketing. The NASDAQ is moving up strong because of the specific stocks that make up the NASDAQ are moving big. That doesn't necessarily mean all the stocks in the NASDAQ are moving big. But what that does mean is you want to go to the sectors that are picking up the most strength because the NASDAQ is showing strength. So it's not the dog wagging the tail wagging the dog. It's if we know the NASDAQ is moving up strong, it's not a question of why isn't everything moving up strong. The question is which ones of the sectors are moving up strong. Let's go after them. Does it look like a double bottom? Yeah, but there's a lot of them that look like that right now. So there's nothing wrong with it. The NASDAQ and S&P are heavily weighted by the biggies. No, not heavily weighted. They're just, they've got them in there. But again, the S&P consists of a lot of stocks, 500 as a matter of fact. So the whole point of our scanning process is if we know the market's going up, let's scan to see which sectors are going up the strongest, or on a reverse basis, if we can see that there's a bunch of stocks going up and you can identify their steel stocks, the assumption is the steel sector is being bought. Okay. Any general questions? Well, again, when they broke out through this level, notice what broke out this fry pan bottom type resistance level. There's your double doji. And what did that tell us? We would have probably a good strong price move. So that's not really anything surprising that when they broke out of a fry pan bottom that we got another strong price move. All right. What do you do if you have 20 good stocks? How do you know which ones to pick? Dan, did you not do our training session? When did we do the 2-day training? I forget. Was it last weekend? But that was the whole point of that training is if we've got 20 good stocks, how do we cultivate them down to the best ones? And that's why you want to know the top rank signals and patterns. So if I was looking at a bunch of them, I'm going to pick the patterns I know that have the strongest upside potential. So if I've got 20 good stocks and I see 2 of them have kicker signals, 2 of them have best friend signals, 1 of them has a McMuffin, 1 of them has a left-right combo, and the rest of them all have bullish signals. Well, now I at least can cultivate that 20 down to 6 that have good, strong signals. Now I can go back and say, all right, which one of these 6 is the best one? And maybe I'll cultivate those 6 down to 2. And those would be the ones I'd get ready to trade tomorrow if they open correctly. However, if they don't open correctly, say the second one that we picked out doesn't, where do you go? You go right back to the list of 6. There's 4 others on there that look pretty good. You see if one of those is starting to open in the right direction. All right, well, yep. Okay, Bill, let's split hairs. Yeah, so there's about 500 stocks in the S&P 500. Okay, so with that, Jim, go ahead and do the double line. And let's keep it limited. We'll be here until the cows come home. If a stock has many recent days with long wicks, I looked at that one, it doesn't really mean anything. Right now, you're still in a fry pan bottom. And what do you expect in a fry pan bottom? Lots of junky trading, except for the trajectory. So what do you do with this one? You just stay long as it doesn't close below the T-line. AFMD, still a good chart. Look at your Morningstar signal. Where was it? If you were buying this one after this signal, wouldn't have bought here because it opened and then started trading lower. So where was a good place to be buying it? When it came back through that open, what did that tell you? The Morningstar signal that gapped up through the T-line is still in progress. You still got a J-hook pattern. MRUS, gap up after a piercing signal. Now you can buy this if it opens positive, telling you the 50-day moving average is not going to act as resistance. Bullish engulfing, doji, bullish engulfing, gap up, scoopish type pattern, doji sandwich. Now you just watch to see what happens once it gets to the 50. This one you can stay long. What happens here? Who did that? You just stay long, plus it pays a good dividend. So wouldn't be trading this one as a trader. Be more apt to be owning that because it pays a good dividend yield. AMRN, you stay long on this as long as it stays above the T-line. American, you can be buying this one on positive trading. Southwest, you can buy on positive trading. United, same scenario. If it opens positive after today's doji. Gold, as far as gold barracks can still be bought if it goes up through the 50. As far as gold itself, it's still sideways. Let's see what the other one is. Yeah, it's just kind of sideways. Might have a double bottom and shaping up, but right now I wouldn't get real excited about gold stocks. And FXE, what is that? The currency, euro? You can go long on this. Watch to see what happens at the 200. Lockheed, stay long. Oh. Stay long, but have your safety stop at today's open after the little gap up. And Northrop, same scenario. Watch for the exuberance at the top. I'd have a safety stop probably at the halfway point of this candle. TKAT, trying to support at the T-line. You can buy on positive trading expecting a J-hook pattern, and then use the T-line as your stop. And BTX, that one looks like doji gap up. You can buy, just be aware that you're in a downtrend, so just watch to see what it does at any of the first resistance levels. Is that what you're looking for? It's drill. I would stay long as it stays above the T-line. SPY, still in an uptrend. Shopify, running into a little trouble right here. So if this opened lower tomorrow, I'd probably close it out and move on to something else because it's still stuck sideways. Blink would be more of a buy if it shows some reason to get back in, like a bobble breakout. So I'd probably be more apt to buy it above today's open, which would also coincide with breaking out through the 200. So I wouldn't, or the 50. I wouldn't buy it until you see strength. Make sure the consolidation's over. Tesla, you can stay long on this. Sold off today, but didn't do a sell signal. Still want to see this move in a positive direction. Otherwise, it might be coming back to test the T-line. INVA. Got a little J-hook pattern off the 50 and the 200 and the T-line and the 34. Kind of a bigger J-hook pattern. Yes. Oh, early March. Well, just the fact that you got all these moving averages right here and it's using it now as support tells you the bulls are in control. Pola has to open positive tomorrow to stay in it. QuantScape needs to stay above the T-line to stay in it. Now, if you're holding that one longer term, might be a little bit more flexible, but I would probably close it out if it closed below the QuantScape, closed below the T-line. You could always buy it back. BCC, gap up through the resistance level. You stay long with your safety stop at today's open. Just stay long, put your safety stop at probably today's low, just because you're up in the overbought area. Volt, just stay long. INTT, stay long, but you have a gap up doji. Put your safety stop at yesterday's close. It shouldn't come back down through there. You want to be a little bit leery because of that gap up. Did I do it? DHI? Yes. What? Oh, DQ. Oh boy, if you were long, you would have closed it out today. You're still in a downtrend. You could go short on this one. PRGB. Oh, that was me. Yeah, read. RRGB, Red Robin. You could go short. Just be aware that it needs to break this level to tell you they're taking it back down to the 50. We did Tesla. Melly, you stay long as it stays above the T-line. Ed, we did Netflix and Amazon. Netflix, you can stay long. Amazon, you can stay long. We did Blink. Blink needs to stay above the T-line. CHPT, that's not good. Bearish left-right combo right here at the 50. If it opens lower, you close it out and wait to see what it does back at the T-line. HIMX. Ugh. It got a doji, which is going to tell you what to do tomorrow. It needs to open up positive to stay long. If it opens lower, you can see it's stuck in a sideways channel. Semi, you can buy this one on positive trading tomorrow, telling you they're confirming the doji and they're staying above the 50. NVTA, another left-right combo right here at the resistance level. If this opens lower tomorrow and starts trading lower, close it out. Yet you called it doji sandwich. On this one, oh, maybe it's because I was, oh, that was my fault. Thought that was green. And believe it or not, I'm colorblind between red and green, which makes it bad when you're riding with me in a car and there's a stop sign in front of the pine tree. But no, that's not a good one. If it opens lower tomorrow telling you they failed at the 200 and this level, you want to be closing it out. NIO, I would probably move money if this opens lower. You're still stuck in a downtrend. It needs to open positive and come back up through today's open to stay in it. I wouldn't short these. I just wouldn't be long. Yep, nothing yet to tell you want to short them. SQBG. Not quite a cradle pattern, but it's still a series of dojis. So you could put it in the cradle pattern classification where you could be buying this one on positive trading tomorrow. Uh-oh, what did I do? Well, I wouldn't be buying lows here because you're in the overbought area and you've already had a good uptrend. So I'd go back and say, where would I have been buying? Maybe right in here. Home Depot, kind of the same scenario. What's your, Edwin, are you asking whether you should be buying these? And the answer is no. You've gapped up in an overbought condition. If I was long Home Depot, I'd have a safety stop right now at today's open. When a stock gaps up but sells off continuously during the day from the open, is that bearish, even though it closes of yesterday's close? It tells you that if you were ready to buy, that's part of the entry strategy. Which one were we referring to? I can't remember. But it would tell you not to be buying because as soon as it opened and it started trading lower, told you the buyers weren't there. Now, what you do is if it opens and immediately starts trading off, even though it opened positive, if it turned around and started coming back up through the open, that would tell you a different story. That would tell you the consolidation is over and you could be buying because it is moving in the direction you thought it should be based upon the signal is confirming. This one you can stay long, or you can be buying this one expecting a 45 degree. Buy immediately on positive trading. I would not, maybe immediate. I'd want to see that it was still holding up and not opening and immediately trading off. Yellow freight was acting well. You could be buying this one, figuring you've got a J-hook pattern in progress. And Facebook, that's kind of a doji sandwich breakout. So basically you're in wave 3. Jay, that's why you always watch to see what the chart is doing, not what you think it should be doing. I doubt if that one's going to come up over here. It's not. So in something like this, if it opened positive, you're getting ready to buy. Let's make this big enough where we can see it. Because you thought it was going to confirm further. It opens and starts trading off. You sit there and say, well, I'm not going to buy this until it comes back up through the open. That kept you out of a bad trade. Okay, on blink, yes. So if this opened, well, it didn't open positive. It did that on Friday, Thursday, opened up here and kind of waffled. So I'd give it a few minutes to see if they're going to trade it up. Well, they really don't move, and they start trading it lower. So I'm not going to buy this until it comes back up through the open. Same thing here. When it opened positive from the previous day, but immediately started trading lower, same scenario. I'd wait to see what it does, and I'm not going to buy it until it comes back up through the open. J-hook pattern breakout, you can still buy this one. Just be a little bit more careful. Okay, so mark your calendars for those folks that want to learn more about options or the correct strategies to be applied to specific candlestick signals and patterns. We're going to start from A and go right through. Now, if you're afraid of, somebody asked today whether are we going to have anything more difficult than buying the calls and buying the puts? The answer is yes and no. We're going to have more strategic strategies like buying call spreads or selling put spreads or vice versa. But that's very easy. That's just one click on, especially on trading programs like Thinkorswim, that you can immediately see what the spread looks like and know what you're going to pay for it, and whether it's worthwhile to go after that spread versus or based upon the maximum your spread's going to be. So I try to keep my option trading as simple as my chart analysis, because I don't want to be spending hours every night after sitting in front of the screen all day, and then spending another hour trying to find the best trades and then figuring out the best option trades. I want to be able to find the best trades and then spend another 10 minutes figuring out the best option trades. I think it's $297. It's a full day training. Can we join if we have taken the options class before? Yes. Ooh. Jace, I don't have it right offhand here. I don't have the members link, so it'll be in the morning and afternoon comments for the rest of the week. $297. Once you pay for it and you do it the first time, then you come back afterwards for free refresher. Okay, so with that, we did it in about an hour tonight. I feel like Ebenezer Scrooge. We did it all in one night. Yes. Raging Cajun, I called up today because the hotel that we used last summer was so convenient to reserve the room, and they said it's already reserved for, so now I got to find another local hotel. So as soon as I do that, I'll make sure I get with everybody. So it looks like we have maybe one space left for a private training session. So if you're interested and need more details, email me, steve@candlestickforum.com with your phone number, and I'll get on the phone with you and give you all the details. Oh yeah, it's still going to happen. It's just at a different, instead of 5 minutes away, it might be 6 minutes away from the house here. Okay, everybody, we will see you bright and early tomorrow morning. We'll see you then.